All right, I'm gonna go ahead and get started. It looks like it's just you and I, Uncle Brim. Um, so this is the set and forget day trade strategy. Who am I? I am Joseph Rodriguez, lifelong trader. By day, I'm a software engineer. Just for the technicalities here, just for educational purposes only. I do just want to provide education for everybody here, everybody that's going to watch this video and whatnot. So the overview, I'm going to go over some definitions. I'm going to go over why zero DTE. I'm going to go over the underlines that we trade, the strategy itself, some back testing, some forward testing, sort of strategy development in there, along with entering a position live. So you can see what that looks like. So zero DTE or DTE is days to expiration. So when you buy an option, they do have a set date in which they expire, either worthless or you get your time decay money through selling the option. There is okay, just making sure I'm on audio here. There is the trailing stop. So a trailing stop is where you kind of protect your gains. If you initially enter a position and you add your stop on it, and that's going to be your trailing stop, typically if the position goes against you immediately, it'll be a loss. So it doesn't always protect your gains, but trailing stop will protect you. A profit target is where you take profit. So you'll see PT or TP of 20%, 40%. That's the target that we're aiming for so that we could take our profits and run. Stop loss is exactly what it sounds like. You put your stop loss on and that stops you from losing some cash on a position. So it protects you from a position going way far against you. OCO is one cancels the other. So there is a feature in Thinkorswim, and other brokerages will have this feature as well. And essentially, you could put in both your profit target limit and your stop loss limit or your trailing stop. I used to have Tasty Trade maybe a month ago, and I had to switch to Thinkorswim because they didn't provide the OCO bracketing functionality for multi-legged positions. They only did it for like naked calls and puts. So I just got the email from them last week, and I think they just started implementing that. So that's really neat. A strangle is a short position strategy where you sell the call side and the put side. And essentially what that's going to do is strangle price into it's going to corral price. You want price to stay in this like little zone of money while time decays. And an iron condor is very similar. I also call it an IC. Similar position, you just buy two long legs on each side, the call and the put side, and this will protect you from price going against you, as well as it'll define your risk. The downside to that is that your area or your zone of strangulation is going to be much smaller than like the naked strangle itself. The plus sides are that there's just less risk on the table. Back testing is you can use softwares to back test your strategy. So it's a good way of kind of getting an idea. If you have an idea, you put it in a back tester. The back tester will verify your hypothesis and say, hey, in the past this was true. That doesn't always mean that it's going to be true in the future. So that's where forward testing comes into play, where you actually implement the strategy, whether that's through a paper trading account or a live account with cash in it, depending on your skill level and your tolerance for, seeing things play out, I suppose. Delta is an option Greek, and I don't want to get too far into these because they are kind of complex. So a delta, when I mention delta, I use it as almost a gauge of how far in the money something is. And you'll see on the next slide, or on the next point I'll make here. But a delta basically the option premium, it defines how much the option premium moves with the underlying stock price movement. So I use, and this one of the strategies here, I'll use the 50 delta, and that's the at the money option strike. And at the money just means the option strike closest to the underlying price of the underlying security you're trading. So why trade zero DTE? The outcome of the trade happens daily, so the return has a greater compounding effect. And this is true, right? So if you have an iron condor on, a 30-day iron condor, and you have to wait 15 to 30 days for that for you to get the benefits of that, or the negative effects of that. Now you have to trade that every 30, 50 days, but with the zero DTE, we're trading these every single day. So the compounding effect can happen quickly, and it can go either positively in your direction or negatively. So keep that in mind. You spend less time in a market, which is great because you are less exposed to like global events happening, say like the Ukraine-Russian war. I got hit pretty hard on the long position there. So being in and out of the market, while it doesn't 100% guarantee that you're not going to get hit by these global events, but it does reduce your exposure drastically. So I think that's really cool about zero DTE. There is a faster feedback loop for trading. So what I mean by this is that your trades can go against you and they can go for you really quickly. And so it's really up to you to be journaling your trades and become a responsive trader where you are adjusting your position as needed. You'll see some examples of that later on. I kind of want to bring up some strategies that didn't work for me and why they didn't work. So you'll see that in a little bit. Zero DTE risk. So the same as point one in the previous slide is that the negative compounding effects can go against you really quick. Faster feedback loop for trading. So again, like the points on the last slide, this is exactly as it sounds. Like your position can go against you negatively, and you really have to be responsive and play the numbers. And what I mean by play the numbers is you're going to see in the back test, there's going to be winning percentages, and you just have to trust your strategy building skills and your iterative process. And that's what I mean by being a responsive trader. It takes a lot of patience and mental fortitude. You're going to see a lot of swings in your account, and that's just the nature of trading daily. You're going to get those. Again, that's just the part of the faster feedback loop too, is you're going to get those trades and in daily. So if you have 3 losers in a row, it's going to look worse than having 3 losers over the course of 30 days, where you can kind of offset those with other trades and stuff. So flash crash. So what happens during a flash crash, and a great example of this is January 6th, where price dipped really fast. And essentially on like an option position, if you held that throughout the day, the spreads would widen and the market makers would skip over your limit orders because the spreads got so wide due to volatility. So that's just something to be, while this is a set and forget strategy, that is something to be cognizant of. So you do kind of want to check in on your position here and there. And just kind of like what's going on globally, because if something happens like January 6th, you may get hurt by this. Luckily, we enter these positions as iron condors. Excuse me. We enter these positions as iron condors, so they do have those long legs that help protect against anything crazy happening, but you could still suffer a significant loss. So let's get into the strategy. The underlines that we actually trade here are the SPX and the SPY. So I'm going to go over some benefits of the SPX and SPY, and vice versa. So the SPX, you can't get assigned on it because it's an indice, so that's a positive. So what I mean by assigned is if you have a short naked side, like a naked put or a naked call, that's if you sold that side, you can, on normal stocks, you can get assigned that position. So that just means that they can call your option and force you to buy 100 shares of that underlying stock. If you don't have enough to cover that, typically your brokerage would liquidate the position for you, and then charge you fees and then send it back to your account. So you typically don't have to worry too much about that. They'll also send a difference. So usually, like when you get assigned these shares, your position typically moved really far one way or the other. So they'll assign the difference of the current underlying stock price with the option price. They'll do the math for you and assign you the difference typically. The SPX also is taxed at a 60-40 tax advantage percentage. So what I mean by 60-40 is that 60% is taxed at long-term capital gains tax, while 40% is taxed at short-term capital gains. The SPX does have more strikes, so it's flexible in that sense. Moving on to the SPY. The SPY is 1/10 the size of the SPX, so that's great for small accounts or even larger accounts that are trying to be more flexible in building a strategy. One of the risks and downsides to trading the SPY is that it just doesn't, I mean, you can get assigned as well. You can get assigned, sorry. And the other risk is, or the other downside is that you don't get the tax advantage of this. And you'll see the flexibility that I'm talking about on this next slide. So I'm just going to jump right into how I develop these strategies. So this is a back testing software that I used, Option Omega. I'll make sure to add these links to the Discord in a bit. I totally forgot to do it over the weekend, but I'm going to go over this really quick so we know what we're looking at. This right here is the equity curve. So this is like what your account looks like through a visualization. You could see these downturns are kind of like where you lose money, and these upturns are where you are winning money. It really resembles almost consolidation and breakout of like a typical like candlestick chart. It's pretty cool. So then sorry. So then you have these annual metrics here. There is red down here. I kind of just cut it off, and you'll see some in the other slides, but there's not much red. This is a very profitable position on the back test. This right here is the actual position. So what I did was I sold 4 puts at the 50 delta. I bought 15 strikes away, the put side. And then on the call side, I traded 3. I sold 3 calls at the 50 delta, which is at the money. And then I bought 15 strikes down. I bought 3 more. So what I did here, it's an iron condor, but it's ratioed. So there's sort of a this bullish bias to this, and I'll show that to you on the chart as well. Here are my entry conditions and my exit conditions. So I opened this trade. So this is a very time-based trade. This is why I call it set and forget. I open it up at 9:33. I allocate 50% of my portfolio to it, which I definitely recommend you figuring out how you want to allocate, because everybody's different. I trade up to 4 contracts. I don't trade on gap days up of more than 2.225 and gap days down to 2.25. I exit, so I put a trailing stop loss of 49%. You can see my stop loss here, and it's tagged as trailing. My profit target's 20%, and I close 50% of the positions. So if I'm trading 4 contracts or 4 lots of these contracts, that means that my first 4-3 ratio, or my first 2 4-3 ratio positions are closed out at 20% profit target. My second 2, or my second one, or my second profit target is 40%, but that's my 3rd lot contract that I'm getting out at. And then my last one I'll get out at is 60%. I do close all trades at 2:55 p.m. Eastern time, and that's just to kind of avoid the late market volatility that can move really quickly and kind of make the position less profitable based on back testing. Some other little stats here. You can see your starting capital, your ending capital, total premium. So that's like everything you paid throughout the position, win percentage, P&L. The Kargar and the MAR I don't typically use. I know that the higher they are, the better. But that's pretty much how I develop my strategies, how I begin to develop my strategies. So here is the actual results of this position. It was not working out. This position is, I had 18 trades in this position. I was not winning. And if we go back to this back test, you can see this huge drawdown area here. The other thing I didn't like about this position was that the max losers were just outweighing the average and max winners overall. So I just did not like that. So I ended up changing this a bit, but this here is TradeSync. So just to let you know where this comes from, this is your cumulative return here, your profit factor, your average returns, your win percentage, which is funny. My win percentage on my best strategy is actually lower than this, and it's all due to risk management. TradeSync breaks things down in a way of like hours and months and days. So you could really see like what days you trade better on, what days you're not as good on, as well as gives you AI insights. I really like TradeSync a lot. So I don't know if anybody's ever seen Option Analyzer here, but this is what an option analyzer looks like, and this is what that position looks like on the Option Analyzer. You can tell almost immediately if you're used to looking at iron condors on the option analyzer that this position is skewed to the bullish side, and that's because there's less risk on the bullish side here. This is your total risk, this blue line, or your total profit once you get over the zero line, this dotted line here. So you can also tell that it's skewed to the bullish side because it's a little bit longer. So here's price and here's break even, these red lines. So price has more to move this way, and it's ever so slightly than it does back this way. Had this been a regular iron condor, you would see your downside risk even or close to even with your upside risk. We can also go over option analyzing a little bit later as well. That's something you guys are interested in. So how did I change that and what am I doing now? I'm currently using the SPX for my position now, and it's the position you'll see today. It's a re-entry position, so if I lose it, I re-enter at midday, and I like that ability. As you can see, the max losers, the max winners, and the average winner and the average loser are pretty close together. So I like that the smaller when I do get taken out of the market. The other position, when I got taken out of the market, it would be almost immediately, and it would be this huge loss. So it really sucked to see. This position, I'm opening. Let me go over the structure here. So this position is a premium based position. So I look for $4 in credit on each side, the call side and the put side when I'm selling the credit. I do buy the long sides to protect me, but also to increase buying power. And then when we trade these positions, I only close out these two positions because these long sides are typically worthless. And so if you try to group this and trade it up and exit the trade altogether, it's going to take a lot longer because nobody wants to buy these on the other end. Nobody wants these because they're worthless. So I open this position at 932. 100% allocation of portfolio. Again, this is what I do. This doesn't have to be what you do. Up to 2% or up to 2 contracts. So right now I'm only trading 2 contracts. I have another back test that I do that I'll be trading 3 contracts on, but I want to see if this one works first, because if this one works, the other one has better return. I just don't want to risk as much throughout that trade. So my exit conditions are I have a fixed $3 trailing stop. So there's a fixed entry and a fixed trailing stop. Once I get 20% profit target, I've closed out half of the position, so I'll have one more position on, but I also tighten that stop loss to $2 fixed. And then you can see here, not trading blackout dates, so like FOMC meetings and things like that. And then I also re-enter after exit. So when I lose the trade, I will re-enter it. So this is what it looks like so far. I only traded 2 days last week. So this is just giving you an honest perspective of what I've gotten so far. You can see the return hasn't been great, but also the markets were kind of wild last week with lots of swings and whatnot. So we'll see how. I think I traded this. I didn't trade Friday last week, so I don't know why that's coming up, but let's see. I think this is Wednesday, Thursday. Yep, Wednesday, Thursday last week is when I traded this. So we'll see what happens today. Hopefully there's better results today. Okay, so here is the bread and butter strategy. This is the one that I've come up with that works perfect. I'm very impressed by this. It actually works better than the back test, which is really cool. So I enter this one at 1:45, and these are all Eastern time. So just so you know, the back tester just works solely on Eastern time. The legs, I buy a $3 fixed premium on each, or I sell the $3 fixed premium for the call on the put side, and then I buy my protection out at 5 cents. You can trade 10 contracts in this guy, 100% of the portfolio allocation. The exit conditions, I do a $3 trailing stop, and I take off 50% of my position at 50%, and then I let the rest ride until the end of the day. The only issue with this is that if you've been following along, I do exit this position at 355. I have my finger on the trigger at 354 because of the volatility. And I had one day where I was up and then I went negative because of just huge slippage. So I decided that it was best for me to close these positions out right before 355 hit, or as 355 hit. This is also a re-entry position, so whenever I lose that position, I will re-enter it. And then you can see my max winners outweigh my max loss, and my average winners outweigh my average losers. So this has been fantastic. And we'll see it here. So over the last month, there's about 8 grand in cumulative returns, profit factor of 2.2, average return of 204, and then that fantastic winning percentage of 48, 49%, if you will. And then you can see how there's AI insights on the side here, and they break it down really nicely for you, and these can be interchanged on what works for you and what you want to look at. So I like TradeSync for that. You could tag your setup. So this is my name for this setup. So I can separate it from all the rest, or I could put it all together. Really nice little software they created here. What else? Just to touch on the winning percentage really quick. You know, a lot of new traders are like, oh, I want to find the strategy that has the highest win percentage. But you can see how effective this strategy is, especially with a profit factor of 2.2 and with the winning percentage of 49%. So it's really what we're doing here is managing risk and not really managing the reward, right? So we kind of let the runners run, and we manage the risk. We take some off the table when we have profits, and we let the rest run. And this is a very controlled strategy. Again, you put it on at 145 and you kind of forget about it until your profit targets are hit. And you'll see when I trade this live that it's really quick to just kind of, you put your advance order on to bracket it, and then you just wait all day until it's one side or the other side. Either you take profit or you hit your stop loss, and then you have to re-enter the position. But that is how I trade my zero DTE strategies currently. I will open it up for Q&A if anybody has any questions.
Hey Joe, I'm pretty good up to here.
And
I
if
think
not, what I
really.
will do is I'm
Can you
going
hear me?
to grab some coffee and I'll leave the room up. But at exactly 8:30, I will start to put the position on. So just make sure you're watching. Oh no, Brim, I can't hear you. I wasn't able to hear you.
How about now? No? Okay, can you hear me now?
Hey, what's up, Brim? I can hear you now.
All right, cool. So me being unfamiliar with Thinkorswim, it's just going through how you structure this, and can you do it prior to, and it'll automatically execute at the open, or are
No,
you
so yeah, so I'll show you right now. It says we're running out of time on the Zoom. We have 9 minutes left, so we're good. That's enough time. So
okay?
so if you look at the Zoom screen or the screen now on Zoom, when I structure this, what I'll do is I'll come over to the trade tab here, and this you have your SPX underlying, so you could type in whatever you want here. And then what I will do is go to the short side. So I'll look at, let me cancel this out. I'll look at so I'm looking for the 50 delta, whatever's closest. So this is 46 delta and this is 55 delta. So the 4 is closer to 50. So I'll just take this short side here. I usually hold control and then I'll hit the bid side. And if you hit the bid, it will populate your sell order. So you're selling this put here. And then I do the same thing on the call side. I will look for the 50, whatever's closest to the 50. In this case, it's 52. The market just opened, so things are running. So we're split here. I'll go for this one because it opens it up a little bit more. Yeah, so this one's still closer, and this one might be closer now. Sorry, I switched this up, so I'm gonna delete this again. So I'll bid side, and things move fast in the beginning of the market. You could see everything's kind of like figuring itself out. And then I go down to the ask price of the smallest one, so 0.05 here. And then I'll hit the ask side while holding control, and that'll add to my position there. And then I'll do the same thing on the call side or the put side. So I'll hold control and then I'll hit the ask side and that'll buy that end for me. And then I will add 2 because I'll do 2 for this position. Right now the credit is insane. Let me just make sure this is correct. So call, yeah, looking good. Wow, that credit is nice. Well, actually, sorry. I'm thinking about my old strategy. These need to be done at $3 or $4 premium. So whatever's closest to $4 is what I'm looking at. So 70 is closer and 380 is closer to $4, and then I will buy these out. I was thinking about my previous morning strategy with the 50 delta. So that's how I structure that. And then you just hit send here, and then it'll send your position out. It'll confirm and send it. It'll tell you like what your buying power is and things like that. And then your position will be working up here. And you could see here's the market price. Here's what my limit order is. So you're just waiting to get filled. And you can, for sake of this video and time, I'm gonna move this down and take a lower fill. I should get hit on this. So my limit's now 50 there. I just got hit. So now that's ready to go. So then what I'll do is I'll go into unallocated equities here. And so here's my position, how it looks on the actual, like this is what it looks like when it's all put together in Thinkorswim when it's confirmed. And remember, I don't manage these 2 sides. So I will take this side, I highlighted, and then I'm gonna hit control, highlight this one. And then what I usually do is I move it to a group and I move that to my morning IC. So now she's in here. So I took it out of the unallocated just so I can keep track of my positions throughout the day. And then I'll highlight them again, holding control, and then I'll right click, and then I'll go to create closing order. And then what I do here is there's advanced orders down here, and I'll go to OCO. We discussed that earlier. And then I will create a duplicate of the first one. So since I take off 50% on the first move or on the first 50% profit target, and we got filled for 850. So you could see your fill if you look at fill orders, see what you got filled for, do the math. So if you sold it for 850, you want to buy it back for less, essentially. That's the concept when you're selling options, is that you want to buy them back for less. So we want to buy for 425. I could have done that math pretty easily, but I pulled up the calculator anyway. 425 is what we're aiming for, so that's 50%. Then we're going to come here and go to trailing stop, and then we are going to put our $3 trailing stop on, so you can just do that. And so I leave the 2 on here because we want to close the whole position out if the stop is hit. And yeah, then the stop is just 1. So this is your take profit of just 1. And then once you hit your take profit, you kind of have to jump back online and do it again. There is a way to do your triggers here, so you can trigger them out, but I kind of like to be in control of seeing what's going on in the market. It's kind of like a reminder, hey, take a look at this. And actually, I think so this position ran up to almost 11 here. I'm gonna put this confirm on, but you'll see an issue that happens. So this was at the market price is at $10. It actually takes the current market price and puts a trailing stop on it, and not a trailing stop on your credit paid. So it didn't put it on here, this 850. So we're really close. And so I'm just gonna monitor this on my own right now. And if we hit 1150, I'll close out the position. Now, this doesn't always happen. Price is moving really fast in both directions. So what'll happen is once we get back down to market price at 850, then technically our trailing stop will be right where it should be. But until then, I'm just going to kind of monitor this, and I might just jump out at that 1150 market price. So I will do a cancel and replace order here. And I'll just watch down here. You can see the natural price go up and down. But we're definitely inching closer to that. And this doesn't typically happen. Typically, the market allows you time to enter this trade so that you don't, so that it doesn't run up on you this quick. But yeah, any more questions, Brim?
No, I was just kind of getting it set up myself over here.
Sweet. Yeah, so we just hit 55. I'm actually going to close this guy out, and then I'll re-enter him in a minute. So, because price is flying. Reorder, and then just quick market and get out. Yeah, so you really just want to manage those 2 inside positions, because if you don't, oh shit. Because if you don't, you won't get filled, and that blows. As we check here. All right, well, we're back down under 11, so and I have to re-enter. It's funny, the day I present, this doesn't work out in my favor. Close this guy. And all right, so we got filled at 1155, so it didn't bleed much. We hit our 5 cents over, so we had to pay $10 more than we expected. The nice thing is that once you have these and you get out of your position, you want to re-enter. If your position is within these 2 long sides, you don't need to buy them again. So you could just kind of reuse them. If I do 3 here and 3 here, now $6 credit, and we will buy and send. All right, we'll wait to get filled on this re-entry. I guess this is a good example too, because you get to see how I re-enter where I don't buy the long sides again. Okay, I'm gonna cut this meeting short. If you want, just shoot me a message in the chat. We could start a new one, but I have less than a minute left, so I'm gonna stop sharing.
Okay, thanks, Joe.
Yeah, no problem.